So for those of you who don't know, welcome. You're going to hopefully be joining an amazing program with Cohort 12. VC Lab is the leading venture capital accelerator in the world today. Last year in 2022, we launched about 175 venture capital firms worldwide. If you look at the most credible report on the number of firms launched last year in total, they're about just under 400. So we were, if you get kind of precise with the numbers, we're somewhere around 45% of what the most credible number of firms launched last year are. But those numbers are kind of not very good. Our numbers are very exact. And what you'll see in the industry, and I want to talk about this for 1 second before I continue talking about the program, most of the numbers are BS, okay? Because you have things like PitchBook. PitchBook makes the numbers up. So they call a small number of people and they email a small number of people, and those people sometimes report data. And sometimes they report not real data. A lot of times they report not real data. And then PitchBook takes this data and says, well, we probably only got about 5% of the market, let's say. And so we're going to guess what the other 95% looks like. Well, okay. If that's a process. So it's guesswork that your analysis of the venture market is. Yeah, largely guesswork. Okay. So our numbers are not guesswork. We know exactly how many firms graduated. We know exactly how much they're raising. We know how many LPs they talk to because most of them use the software that we give them for free. And so our numbers are very accurate, quite the opposite. In fact, if anything, they might be a little low. We're undercounting because we might miss something or something. Maybe someone signed a LP not in the software. So there's more LPs signed than the software shows, but generally we'll show what the software shows. And so our numbers are super accurate. And that should be a lesson for everyone here because you're going into a very oblique market. Venture capital does not have a lot of data out there. Venture capital does not have a lot of accurate information out there and misreporting and all this stuff. And so one other thing on that, right now, things seem to be booming. August was a slow month, but June was the largest month in our history. July was the second largest month in our history. August is a little slower. Thank God. We were like, there's not going to be a summer slowdown this year. On top of that, we may have our largest cohort in history for cohort 12. We'll see. If all 100 enroll, we'll definitely have the largest cohort. If half the 100 enroll, we'll still have the largest cohort. But there's only one more day. But people do straggle in late, which is I wouldn't recommend. But anyway, make a long story short. So you read like emerging managers are suffering, new managers are down, and we have actual data and we see none of that. So a little bit more about the program and why we're doing it, et cetera. So the program is a completely free 4-month accelerator so that you can take your fund and close it. And for many people, we work with lots of new managers. About 11% are emerging managers, and we have fund to funds and everything. So if you're a new manager, an emerging manager working on fund 2 or fund 3, or even working on a fund to funds, the program will get you from an idea to a closed fund we're averaging about 5.7 months right now. The program itself is 4 months. Some people will close inside of the 4-month window, and a bunch of people will close shortly after the 4-month window, and some people may even take up to a year. Okay. And what the program does to achieve this success, and the funds are performing fantastically. Like we have a fund of funds that invests in alumni, and we don't have a J curve. Right. And the J curve is when you have a fund and you start making investments, the fees start charging, and then it takes a while for the portfolio to start getting markups. So your returns look like a J. You start making the investments, you start charging fees, and the investments start getting profitable. Well, we don't have a J curve because our funds are warehousing very good deals, are doing very good deals, and they are getting markups very quickly, even in this market. And yeah, so, I think right now, also based on data, that our funds are outperforming the market. So while we're roughly 45% of the funds launched in 2022, the funds that we've launched on the whole are going to be stronger than their counterparts that did not go through the program. And how we achieve the fast closing and the good performance is we do a variety of things that is super helpful. So first and foremost, we have a curriculum that has weekly work for you to do to close your fund. And that curriculum is really thought so you don't make obvious mistakes, you don't do things out of order, and it just saves tons of time because there's no manual, right, on how to do this, and it's complicated, right? On top of that, every week we have AMAs with Mike, myself, and others, and we have experts that we bring in to talk about whatever you're working on, right? So we have most of them right now are alumni, because our alumni are like the best, right? They're outperforming market. So there's no one better to come and talk to you about closing limited partners than our number one closer, because that person closes like crazy. In fact, yesterday we announced, and he's not even our number one closer, that a fund targeting $10 million just closed on $23 million, right? So he was oversubscribed by over 2x. And that's very hard to do, but we have lots and lots of people doing that, and lots of people are going to show you how to do it and help you through this whole journey. And so there's a whole mentorship component. On top of that, the community is fantastic, very active. You will make friends, you will have peers around the world that you met in the program, and everyone is exceptional. And we have some announcements about that as well. So you have a really amazing with Slack and tools and communication tools, which is my last piece here. But so a really vibrant, very supportive community, sharing deals, sharing insights, helping one another. It's fabulous. And then last but not least, we provide you with completely free tools. So if you were to go start a fund right now, you probably need DocSend, DocuSign, a CRM, and the list goes on, right? Other sorts of file storage stuff, et cetera, okay? All that stuff is super expensive, and frankly, it's not really built for VC. So what a lot of VCs did in the past is they would take 5 tools and they would kind of stick it together with Zapier or something in the middle, and that was called the VC tech stack. And you can Google VC tech stack, and it's like embarrassing, some of the stuff that comes up, like 30 tools pieced together with different APIs, and like it ghetto, embarrassing, honestly, that an industry that controls hundreds of billions of dollars a year is running on email and Zapier. Okay, this isn't 1994. All right, it's 2023. So we built a modern tech stack for venture, and it's free. And a lot of people are like, well, why is the program free? And why is this all free? We're not doing it to make money. Okay. We happen to be making money and doing very fine as a business. I'll tell you how we make money in a moment, but we're not doing this to make money. We're doing this to fix the world. Okay. If you take money and you apply it to problems, you will solve those problems. And right now, we're not doing that in anywhere near the scale that needs to be done. Every single problem facing humanity, whether it be something like healthcare or climate, or, there's a lot of problems, right? Full cycle product development so that you can recycle, downcycle, We need solutions for so many, transportation, urban development, everything. We've just gone way off path. And the way we're going to fix that is taking money and investing it into solutions. And so every manager that we work with agrees to the Mensarius Oath, and we're just taking capital and deploying it to the problems that matter at scale worldwide. And we're helping managers come into the field that can do this. And so, yeah, we have no intention of charging for stuff to help people to get off the ground. Now, we do charge for something, and that's to help you set up and run the actual fund. We have a formation group. It has a 94 net promoter score, which is kind of insane. Like, it would be like giving your law firm, accounting firm, back office firm like a 94 net promoter score. That doesn't happen. Okay. So the reason the thing has a high NPS is because we're half the price of everyone else, because we're not about making money, but we do have to pay people, right? And we care. So if we see that you're running into problems or struggling or whatever, we're there to help. We've built dozens of playbooks to help. And so let me tell, that's a little bit about VC Lab. Let me talk a little bit about Cohort 12. There's some cool stuff coming. And then I'll briefly go over the application process. Let me be sensitive of time here. Okay, we got some time. And then we'll do all your questions. Get your questions in the Q&A. I see there's not a ton of questions right now. All right. So few things that we've done for Cohort 12 that I'm pretty excited about. So obviously, everything's always being upgraded. So the tool is about to go through a massive upgrade. We have some really cool stuff in the tool. The curriculum's always being updated. Actually, our methodology of doing the working groups, which are small groups of peers to interact with one another, we've been improving that and testing improvements, and they look fantastic. So you're going to be with really like-minded peers in your region of the world that are also starting venture capital firms that are very similar to you, but not in the same stage per se. So there might be so you'll be able to meet co-investors for future rounds and sources of deals in your working group. Because we have such large geographic distribution, we can do really cool things there. We're expanding our emerging manager track, and we're adding a fund of funds track. So that's pretty exciting. We've got about 12%, 11 to 12% of the program right now. And of course, when admissions is done, we'll know the exact number. Are emerging managers. So they're working on Fund 2 and Fund 3. And we've launched a bunch of fund of funds, many of whom fund alumni. We have our own fund of fund, and we have a fund of funds track. I don't know the stats on that right now, but we'll have a handful, but that's still a lot in the world of fund of funds, because there aren't that many fund of funds that focus on new managers. In fact, I think we've launched most of them at this point, where before us, there was like a couple, and we've launched at least 4, so that I know of off the top of my head. So, we've kind of doubled the number. We went from 2, now it's 6, so more than doubled, but we created double the number of fund of funds focused on new and emerging managers. And then in terms of some other announcements for Cohort 12, that's cool. We've got new deal flow sharing stuff that we're working on right now. We have a deal flow net newsletter that goes out every week. It's really cool. You can submit your deals. Right now, it's not the best looking form, but it's good enough. You submit your deals. It goes out to the community in real time through Slack and other means. And then every week we send out a newsletter. And if you like a deal that you see, there's a button and you just click it and it adds that deal right to your CRM. That's just so cool. I'm really proud of the team for that. And so as we expand, hopefully even before the end of this year, you'll be able to click, do you want to share your deal more widely? So right now it just shares in the community, and we're seeing co-investments happen, really exciting things, people helping those companies. So deal flow sharing has been a big win, and you're going to be really the first cohort in cohort 12 to have the full deal flow experience, and only gets better, right? Because we enhance everything that we do. We have another really cool thing called Decile Base. You may have seen it online. It's an AI large language model that only uses a professionally answered Q&A for venture capital as the source. And so you can literally ask it anything, and it will give you the right answer. And if it doesn't have the answer in the large language model, and it only draws from this expert knowledge base. So if you ask it like about Taylor Swift or whatever, it won't answer. But interestingly enough, it has a Q&A system attached to it. So if it's not answered by the LM, you just hit submit question. It puts it out to our community of experts, and one of the experts answers it for you, and then it expands the knowledge base of the LLM. It's fantastic. Okay, it's going to save you endless amounts of time. You can ask it anything, even if you don't know the proper terms, and it will give you a very good answer, and it will show you all the answers that it sucked from, so you can do primary research as well. But in terms of LLMs and like BS issues, it has none of them. You ask an LLM to write you something, you're going to get a load of like junkily written verbiage. And this is like very precise, actual answers to any question that you have. And it can even be a multidisciplinary, like part legal, part strategy, part finance. And it will pull the answer because it will suck it from the different legal, strategy, and finance components answers that it got from its database. Okay, other than that, I don't really, there's a lot more happening in cohort 12. It's going to be amazing. I'll spare you. I'll leave you with just where we are in the admissions process so everybody knows. As I brought up in the beginning, we are at, I can reload if it's changed. We were at 108 accepted and 276 confirmed. No, we're still at 108 accepted. And it's, you know, we have people working now kind of all the time on this. And so let me tell you what happened. So later today, if you're accepted, so the way we do rolling admissions, we like to get to 3 something enrolled. And any larger than that, the program's like, you'll see, it's a good number. It makes very active community. You know, you have good working group sizes. You're going to be in a working group, which is usually 7 to 10 people with, you know, you can find people nearby who are, you know, similar interests. All this stuff is pretty awesome. And so we generally will, later today, we're closing admissions. Now, what will happen, of course, is someone will be like, oh my God, you know, my partner forgot to apply or whatever. And we're not totally unreasonable. So over the next week, there'll be like a straggler here, a straggler there, someone's partner, whatever, that didn't apply or applied but didn't finish, and so it will actually grow over the next week. So if I were to take a guess, we'll end today maybe at 310, 315, and then a few more stragglers. So it'll be about 325, which will probably be one of our larger programs, if not our largest, as I was saying earlier. And just to walk you through it, if you finish an application, it gets reviewed by our team. And then if you're accepted, you're going to get an email from us. So I recommend you check your spam folder, you check different things to make sure that if you were accepted, you didn't miss it. I know there's a lot of accepted people on this webinar right now. If you're accepted, all you need to do is just share publicly your support for the Mensari SO, because we only want to work with people who are aligned with our vision and values publicly. And then you're in. That's it. The program begins completely free. There's no cost, no secret, nothing. As I mentioned, we do have a formation and back office program to help you set you up. That you pay for it no matter what you do. Like, in fact, and as I mentioned, we're about half the cost of the cheapest provider, and we have a 94 MPS, and that's completely optional, right? So everything's free, pretty much. The software, the experience, all that. But we do need you to agree to the mensarius oath. Now, not everyone's going to get it. We're at this point, we're declining people. And I think there's a few more applicants we're going to process because I think we have 13 right now that need to be processed. Could have dropped a little. So those will be done today. But then admissions will generally close for cohort 12. We're going to shoot around 5 p.m. Pacific today to send everyone a decline message. Most people are already declined. So if you're in the accepted bucket or one of the few people that have an outstanding application, we'll get to it soon. And everyone else, we're going to be sending you a message. Now you have two options, okay? You can join the Venture Institute that starts in October, or you can join cohort 13 that starts, I believe, in November. I'll talk briefly about the two things. Venture Institute is a completely free training program to learn about venture capital, and you'll get a job in VC. Now, we have a lot of VCs who are taking it because they want to do a deeper dive in how venture capital works before they start their own venture capital firm. But Venture Institute is a training program. And if you complete the training program and do a good job, we're going to invite you to get a job at one of our VC firms that we've helped accelerate, or at VC Lab. And right now it's super hard to get a job in venture, and it's pretty hard to get a job even at VC Lab because we just have like crazy numbers of applicants, like hundreds of people apply for every position, and some of them are just ridiculous. So the Venture Institute, great opportunity. If VC Lab wasn't a fit, get your primer in the Venture Institute. It will fill up in a week. Applications are open, but we haven't announced them, and we have 500 applicants, okay? So we're going to announce them. I was going to announce them today, but I didn't have time. So I'll probably announce them tomorrow, and it will fill up in a week. So, and as I said, it's not even announced, and we have 500 people who've applied. So then cohort 13 will start in November. Now, cohort 12 will get a lot of people formed and closed, being a vintage 2023 fund. Cohort 13, you're really looking at vintage 2024. And you never know what the vintage year will bring. Niels, maybe you could put the article on vintage years in there. But 2023 is a fantastic vintage year, and without a question. And 2024, who knows? We'll see. I'm cautiously optimistic, but definitely 2023 is looking to be a great vintage year with the advent of AI in a commercial way. So many exciting things are happening this year that to be an investor right now, it's like, kid in a candy store, right? You're just going to see the deals like you see once a decade, if that, right? The last time I think things were this good was like 2008, 2009. It was like pretty much Uber, Slack, Instagram, just a huge number of seminal internet companies were born in that time, and we're in that time again. Okay, so I think I've covered announcements, the upgrades of VC. We've talked about the VC Lab program and the upgrades. I've talked about like the admissions process, but really now I want to get to questions. So if you could screen out some of the questions, Niels, come on screen and start asking. Remember, get your questions in there, and then you'll see a little thumbs up button. If you like a question, hit thumbs up, and we'll do our best to answer it first. All right, Niels, questions?
Question number one, just to confirm, is this program a good fit for venture partners who aren't GPs?
No venture partners are allowed into VC Lab. So yep. VC Lab is only for general partners. Venture Institute, which starts in October, is for, and we will remove venture partners from the program. I think I accepted a venture partner the other day. Apologies if that was you, but you will be removed. And so the program for venture partners is the Venture Institute. That is a 8 sprint. It's a little more than 8 weeks because there's breaks, but roughly 2 month training program for venture capitalists. And it's really for associates, analysts, principals, venture capitalists, and venture partners. Okay. And you'll learn all about venture capital. When that program's over, you'll have a 2-month apprenticeship if you want, and then you should be able to get a job offer. But it's only if you're not doing the work, if you're not actually trying, you don't make it to the end of the program. But people who do the work, who try and are really understand the industry, will place them in an apprenticeship and place them into a fund.
Sam Lawson is asking, what are the specific fees that VC Lab charges for fund formation, and do we form funds that do secondary investing?
No. The last is no. We're here to create venture capital firms that are going to invest in the companies that change the world for the better. So like, we'll accept a dual use fund sometimes, but even there, we're like, we don't really want to be helping people who are, giving people that kill people money, right? Like, that's really not our thing. Okay. So secondary funds, they're needed. I know a lot of people that run secondary funds, friends of mine. I think they're good, but it's not our mission, right? Our mission is to help fix the world by getting lots of investors putting money on solutions and diverting a large percentage of GDP to these pressing human challenges. So back to your first question. Yeah, so the cost of we call it Decile launch to set up and run your fund is $50,000 flat rate to set up the 3 entities and all the paperwork and all the closings. So there's a lot of like scammy people out there. By the way, the entire venture capital industry might be defined by scammy people, including the venture capitalists themselves. But the vendors are no better. And so they'll be like, oh yeah, it's like $35K to set it up. They set up like 1 entity. They use template documents for the other 2. And then they don't charge you per closing. So you pay per closing like $10,000, $15,000, $20,000. So it's like flat, 50,000, all the entities properly set up, all the closings, 100%. Then it's 25K a year. And we also become a venture partner. And so, and just when you look at the other providers out there, the setup's always more expensive because there's tons of hidden costs. And then the annual fees usually are based on the number of LPs and this and that. And it's lots of, and then they charge by the hour. We're just flat, fixed rate. Let's keep going with different questions.
Yes, sir. Checho is asking a question about GP commits, saying, I understand that to form a fund, the GP must contribute part of the capital. Can this capital be contributed in the form of equity in the companies in which we already have equity?
Yes, that's called a warehouse deal. So let me talk about GP commits and warehousing briefly. So most limited partners will ask that you put 1% of the fund in as your GP commit. So if it's a $10 million fund, for round numbers, it would be 100,000. Nobody here should probably be doing a $10 million fund unless you can roll out of bed and raise $10 million. If you can't roll out of bed and raise $10 million, do not do a $10 million fund. Whatever your fund, if you think you can roll out of bed and do 3 million, do a $3 million fund. If you can roll out of bed and do 5 million, do a $5 million fund. Generally speaking, for funds under $10 million, LPs don't ask the GPs to do a GP commit, but sometimes they do, okay? And these GP commits are paid over time through the capital calls. So if you have $10 million fund, 1% GP commit, that's a $100,000 obligation, but you don't write a $100,000 check. You do a capital call for 20%, and then you write a $20,000 check. Now, you can put startup equity paid for at cost. So if you bought equity at 25K and it's worth 50K right now, and you put that 50K worth of equity into a fund, you put it in at what you paid for it, 25K, and that 25K will get debited from your capital commit of 100K, which will now bring your capital commit down to 75,000. Hopefully that was clear and better than ChatGPT. Just teasing, because that I don't even think it would know this stuff. And that process is called deal warehousing.
Yeah, I put an article we have on deal warehousing in the chat. Next question, we already sort of answered. How do people know if they're selected?
Well, I can tell you, I can just look your name up. So if you hold on, Jay, I'm presuming that's pronounced Jays. So I can look people's applications up. You will get an email from us today. You have not applied. If that's your name, I can look up your last name, but your first name, which is pretty unique, is definitely not in the system. So you have not applied, but let's see if your last name's in the system. Nope. So you haven't applied. To apply, maybe you could put the application link in. Now, a lot of people accidentally applied to other programs. Like they may have applied to the Founder Institute or something like that. Or maybe you applied to the Venture Institute, which is the venture capital training program, but you have not applied to VC Lab cohort 12. And we'll send an email. Either you have an acceptance letter, you're in the applied bucket, we're going to finish today, and then at 5 p.m. today, we're sending everyone a message to let them know that the admissions is closed, and they probably didn't get in because we had about 2,300 people that applied, and not everyone will make it.
Alex is interested in early stage investing and is asking, how do I choose between venture studio, angel, and pre-seed?
Well, that's like, first of all, you don't do early stage. I think there's a thesis article you should share, Niels, that talks about stages, but never say early stage. Early stage isn't a stage. And really how you choose, I mean, you have to choose. Let's start there. So you can't not choose, right? Not choosing would be picking early stage as an example, but that is a stage. It's not a stage, okay? And so, and you don't have to do all the deals in the stage that you choose. So if you choose angel stage, let's say, you can do some pre-seed deals, you can do some seed deals, just not more than 20 or 30%. So how do you choose? Basically, where do you, companies at the different stages are very different. At the venture studio stage, I mean, you're coming up with the idea, so it's like radically different. The angel stage, they're kind of like still excited about the idea. At the pre-seed stage, they're kind of executing on the initial product market fit. And at the seed stage, they're kind of fueling up because they have initial product market fit to start scaling. And then Series A, it's like really scale your product market fit into an IPO, basically, because you're going to, once you're in that game, it's like IPO acquisition. So what type of company do you like working with? What type of people, what type of problems do you want, like brainstorming? What type of, like, so really it's very personal. Like, I can't answer that, but you have to say, like, what do you like? And then the stage will become obvious.
Matt is asking, do you have any thoughts on emerging growth or late stage private equity funds versus emerging venture capital?
Um, so those aren't, it's not, I don't think that's, I think you're asking, you mix things. You talk about late stage and emerging managers. Emerging managers is not a stage related thing. So let's talk about that. So there's late stage venture capital, there's private equity, and there's early stage venture capital, right? So that's like the stage of the company. Emerging manager and new manager is really talking about the stage of the fund or firm, okay? So a new manager means you're on fund one and sometimes fund two, right? New managers have a very bad reputation among limited partners. So you can pretty much only raise money from your network. There almost no funds invest in new managers, no institutions invest in new managers. You might get a corporate here or there, but you're not getting endowments and the like. So new managers are, you have a scarlet letter on your head, and it's very difficult to do. And that's why this program is super helpful, because we make it relatively easy. Emerging managers are on fund 2, 3, and sometimes 4. And so it's like you start out as a new manager and you become an emerging manager, right? So emerging managers have it a bit easier. They can go after bigger sources of capital, and then established funds are the third bucket. That's like fund 4 plus. Okay. Now, if you look at the differences between early stage investing, late stage investing, and PE, late stage investing got really fucked up, for lack of a better word, because you had guys like SoftBank and Tiger Global come in and make it rain with like $1,000 bills, right, at like a nightclub. Like, you can imagine what happens when someone comes into a nightclub and makes it rain with $1,000 bills. Like, all sorts of debauchery goes hog wild, right? And that's exactly what happened in venture. So these guys came in, they were writing $100 million checks or more, right? $300 million checks. But I think SoftBank got to the point where it's like, I can't write anything less than 300 million. Like, okay, like, what do I do with that? Like, I'll buy office space all around the world, or lease office space all around the world, like crazy stuff, right? And so the later stage VC got punch drunk and they started doing crazy stuff. So basically, later stage VC and PE went nuts in the last few. And then SPACs, it just was nuts, like no basis in reality, lost. Early stage wasn't that effective. I mean, made lots of money, but it wasn't like the valuations went crazy. You were still some dude with a random idea. It's like very difficult to give you like tens of millions of dollar valuation because you have nothing. So valuations in the early stage didn't go as crazy as it went in the later stage, but all the early stage investors made a lot of money. And here's the thing, the early stage investors made a lot of money, like, period, because the later stage investors would buy them out. Even if you were a unicorn yesterday and now you're worth 500 million, but you got in at a $5 million valuation, that's 100x, right? So maybe it's not 250x anymore, it's 100x, but you still have 100x. So early stage investors have done great. It's been like, a really great time in early stage. And in the early stage side, which has done great, new managers have done the best. So it's like, it's been a great time for new and emerging managers in the early stage. And that's exactly where we focus. So it's like been just great. And yeah, there aren't the crazy multi-$100 million investors out there anymore. Thank God. It just messed up that stage of the market. But there's still lots of companies getting multi-$100 million and billion-dollar valuations, right? They're just not getting a $300 million check. which was crazy.
Mark is asking, or Mac rather, is asking, do all GPs need to apply together with managing partners?
Yes. So look, it's really a managing partner and a general partner program. What's going to happen is you're going to get in the program. You're going to be like, this program's amazing. The program's NPS is an 86, and we measure it quarterly. So that was Q2. We're going to do Q3 soon. So our Q2 NPS measured towards the end of the quarter, last quarter, 86. Okay. It's a great program. So you're going to get in there and be like, oh crap, my other people should apply. This happens. And so for the first week or two, people are like, oh, I'm partners with so-and-so. I didn't apply. Can I get in? And we have to deal with all that. So, but the better thing is for you just to get everyone's application in today. And if we accept one person on your team, we'll accept everyone on your team, but no venture partners.
Another question from Checho. He's asking about the 20 hours per week that we recommend. Is that per person or per partner?
Look, it's okay. You're going to be building a venture capital firm. One of the hardest things a human being can do. Okay. The very fact that you're thinking to do it means that you're an exceptional human being. This is not something you're like, I'm going to be a VC, or maybe it's, should I work in a supermarket? I don't know. Let me think about that. Like, not. Like, you have to be an amazing human to be a venture capitalist and to get into the program, and you have to be ethical. Okay. So, you're embarking on a difficult journey. And it's not like how many hours a week is it? You're going to do something hard. It's going to take what it takes, right? And if you have a fantastic network and you can roll out of bed and raise money like a pro, it might be a bit easier, but it's still going to be hard. So it's not that it's like, how many hours is the program? It's not, you're not doing any program stuff. You're building your firm, right? And that takes time. Takes what it takes. And when you start closing, it's going to take 40 to 60 hours a week. That's it. Like, it's not me. It's what it takes. It's like, it's not like I'm just telling you the reality. It takes that if you're in VC Lab, not in VC Lab, on your own, whatever. Like, if you're going to close a fund, it's going to take you 40 to 60 hours a week for probably the better part of a few months, 2+ months, right? And 2 months is fast. All right. So that's closing. Now, setting up to close takes less. So that takes maybe 20 to 40 hours a week. In the beginning, 20 hours. As you move closer and closer to closing, it ramps up to 40 hours. As you go into closing, it will take 40 to 60 hours. And that's just, again, what it takes. Now, a lot of people are like, well, I'm going to do it my way. Well, I'm going to tell you what your way is, right? Because I know what this way is. I've done it. I've closed lots of funds. I know. And we work with lots of people inside and outside the program. So basically, it's going to take you years, because you can't take, first of all, closing and building a fund is a momentum game. So you don't get momentum by stretching time out. What happens when you stretch time out is that you just stretch time out and you never get momentum. So in about 18 months of stretching time out, working 10 hours, 15 hours a week, when you need to actually be doing more, is then you're like, this isn't going anywhere. God, I got to focus. And then you do exactly what we tell you to do, but 18 months later, and then you close in 24 months. So the average time for a new manager to close a firm and a fund is 18 to 24 months. The average time of a person to close a firm or a fund in VC Lab is 5.7 months. Okay. Now, it's not like we put you through a program that forces you to do the things in the right order and like get it done correctly. But, and as a result, you get it done faster, and we help you build the momentum, and it just takes the time it takes to do that right.
I can take care of this one.
Yeah, you want to get it?
Yep. Will the recording be shared later with closed captions? You will get the recording via email, and we will also share it on YouTube. I've gone ahead and put the YouTube link in the chat. And on YouTube, you can easily turn on the closed captions.
And guys, so upvote questions. How are we doing on time? Oh, we got 10 minutes. We'll try.
Yeah.
I'll go faster.
Sounds good. Next question. Aga is asking, can we apply to both programs, so the Accelerator and Venture Institute?
Yeah, definitely you can. I would say that some Venture Institute people went into VC Lab Cohort 12 and vice versa. Some Cohort 11 people took Venture Institute. The Venture Institute is probably 10 to 15 hours of work a week, give or take, and that is learning work. So that's actually stuff that we've designed it to be 10 to 15 hours a week. So it's not as intensive as building and launching a fund in a firm. But when you're building and launching a fund in a firm, and if you have an extra 10 to 15 hours a week, then you could enroll in the Venture Institute. But we're really trying to train associates. So there's a problem in the world of venture that there's not enough talent who understands the model. We're growing the market, right? So I see a future with 10 to 15,000. So right now worldwide, there's about 5,000 firms. And I see a future where we add 10 to 15,000 more, where every major city, every country has thriving venture capital ecosystems. And we need talent. So really Venture Institute's designed to train the talent to help the managers run the firms, right?
Carly is asking, can people get one-on-one support during cohort 12?
Yes. So we have, if you sign up for Decile launch during the program and you're not ready to close, we have something called Decile Start. And it's one-on-one support focused on getting LP commitments. So it's a LP commitment extra accelerator, if you will. And there's one-on-one support during the program with Decile Start.
Does our team have advisors with experience setting up an accelerator / fund hybrid?
Yeah, of course. There's an article on, I mean, I published the stats. Do you remember what the number of venture builders are? Just the number of venture builders, I believe. Do you remember, Neil?
I don't know off the top of my head.
I think I did the math somewhere, so I could pull the sheet up, but I could also just look on LinkedIn. So let me see if I can find it on LinkedIn. It was like 12 or 13% of cohort so far of this cohort.
That sounds about right.
Yeah, so it's I'll tell you the exact number. Give me 1 second. It's 11% studios right now, venture studios. Accelerators are on top of that. So it's a double-digit percentage of the program. We have tons of experience in advisors in that area.
Then Angelica is asking about Decile Hub. How long is the software free, and is it only available after you graduate from the program?
No, you get it in the program, and it's free. It's going to be free forever. So let's start there. Now, there's going to be pieces of it that are going to be paid for at some point. And we're not exactly sure what those pieces are. So but by the end of this year, there's going to be some components of the software that you would have to pay for. But I'll give you an example so you understand. So we're doing LP matching right now. That's one of the things we're testing with cohort 12. And we're testing it right now with some Decile launch people, and it's going very well. And you basically you put in some sample LPs that you are interested in, and then it will match against those and give you a list of LPs to go after. And we'll build that into the software, and that's not going to be free. That's an example, but most of the software will be free.
Can the geography of the fund be changed during the first weeks? Someone's considering Europe now, but may switch to the US.
Yeah, the first month of the program, you're working on your thesis and you're going to be refining it. And a lot of people are like, oh, that's such a waste of time. Niels, I mean, you've seen the program. This like the theses go from pretty awful to pretty good over the course of a month. Do you want to share the Chat GPT thesis evaluator in the chat as well? It's on an article, and I can get the next question. But yeah, you're going to spend a month working on your thesis, and by the time you're done, you're going to have a great thesis. So great that 1 in 5 people you just tell it to will be interested in investing. That's our goal. That's our metric benchmark. Can another MPGP of the same firm join the program along with an existing GP? Yes, every GP, it has to be a GP or managing partner that comes in, will automatically be accepted if one of them is accepted. If we've secured LP commitments already close to closing our fund, but still want to keep in touch with VC Lab, and what's the best way to do that? I mean, the VC Lab network is for just enroll in the program, Matt. There's tons of people. As I mentioned, lots of people close during the program. It's not uncommon. About, I don't know the number, but it's a double-digit percentage close before the end of the program. So in month 2, 3, and 4, and then a bunch of people close after. So join the program. Do all GPs in the fund have to put 1% in each? No, it's 1% divided pro rata by the ownership of the GP. So if one GP is like a 40% owner and the other 2 GPs are 20% owners or something like that, or 30% owners, I should say, then, well, usually you have a pool, but so you would divide it pro rata.
Aga is asking if we're already working on our fund formation and want to use the VC Lab program to ensure we're doing everything correctly. Do we still need to pay the 50K fee?
The VC Lab program covers fund formation. So it depends on if you guys are working with Carta, we're gonna kick you out of the program. So as long as you're not working with Carta, we don't care. We just don't find Carta to be good. And as a result, we end up having to do like triage and like they do things, they make lots of mistakes, and then we're always like, people are like, oh, what do I do? And we're like, look, we're not Carta support specialists. Like, they fucked up, go talk to them. So if you're working with Carta, because we've had to deal with so much Carta related mistakes and drama, we can't work with you. But other than that, yeah, people form with all sorts of entities all around the world. Most of them, like, candidly suck. That's why customers or people went through the accelerator were like, God, this sucks. Lawyers suck. They make mistakes. They're expensive. The back office people suck. They make mistakes. They're expensive. Can you fix this? And we're like, okay. So we did fix it. But yeah, if you're already in process, it's going to be, you're going to deal with a suckage firsthand. It's terrible, which is why we fixed it.
We do need to wrap now, I think.
Are we out? Are we out of time? All right. So with that said, everybody, there's a few last questions here that we didn't get to, but hopefully we got to them all. If you haven't finished your application, you can finish it. We're going to be processing it till 5 p.m. today at Pacific time. So that's, if you're in Europe or whatever, you got lots of time. And then we're going to shut everything down. If you haven't finished your acceptance, please do. We'd love to have you. It's going to be a great program. Honestly, cohort 11 was better than cohort 10. Cohort 10 was our best ever. And like, we have better quality theses in cohort 11 and more money closed at this time in the program than in cohort 10. So we're really, really excited about cohort 12, which on the surface right now is looking to be even stronger. So thanks, everyone. Have a great day. Bye, guys.